Hello investors and future investors, welcome to the channel. For today's video, I'm going to be showing you how to trade Palantir in order for you to maximize the opportunity that has been given. Yes, Palantir has recently had a drawback that's been around 9 or 10%. So for today's video, I'm going to be showing you how I'm going to be using a long-term option strategy in order for you to make short-term gains. Now, if you're new to options trading or you're trying to use options trading in order for you to supplement your regular 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be showing you how to capitalize on Palantir's recent drawback. I'm going to show you an option strategy that can be used in order for you to make some short-term gains using a long-term option strategy. Now, Palantir is one of those stocks that's been in the news, and Palantir has an insane upward movement. So we are going to look to capitalize on this recent drawback. Now, you guys know how we do it. We're going to go ahead and get down and dirty with options. Now, when we say we're going to get down and dirty with options, it simply means that I will be giving you a step-by-step walkthrough of what I'm doing in order for me to capitalize. Now, before we get into anything, let's go ahead and jump into the advanced feature right here to see what we're working with. So let's go ahead and open that up so we could open up the charts. Now we're going to go ahead and we're going to go to the 1 year outlook, which is right here, 1Y. Okay, now that we have that open, for those of you new to the channel, you guys should know I use two primary indicators in order for me to make a decision of what option strategy I want to use. Those indicators are going to be this blue line right here, which is the 200-day moving average, and the one to the bottom here, which is going to be the RSI, or the relative strength index. So let's get started with the RSI. Now, the RSI of Palantir is usually way above the 50 mark. 50 mark is the even part. Now, after the recent drawback, the RSI on Palantir is trading around 50. I did check this out on Yahoo Finance, so go ahead and you could check it out right there. Robinhood chart has not been updated as yet. So now that I noticed that there's a 48 RSI with Palantir, it gives me an opportunity to decide if I actually want to get into this stock. Now I'm going to go ahead and get second confirmation by looking at my 200-day moving average, and that's this blue line right here. Now, the 200-day moving average tells you that Palantir is actually been trading around the $84, $85 mark for the last 200 days or 6 months. This is actually where it was trading for the last 200 days. Now, currently, the share price is at $134.51, which is way above the 200-day moving average. Now, it does not matter what any stock is showing you, there's always a strategy that can be used. So right off the bat, I know I'm not going to go into a very long-term option strategy with this because the share price is way too high above the 200-day moving average. Now, let's go ahead to the 1 week chart before we go ahead and do the actual option strategy that I will be using today. So on the 1 week chart, you could see the high, it dropped from around $46 and it dropped all the way down to about $130. Remember the $130 mark. Now, from 146 to around 130, that's a very, very drastic drop. However, it did recover to where it's trading at right now at 134. So we're going to use the 134. The difference between the 146 and the 134 is about a $12 drop, or let's say roughly around a 10% drop in the stock price. So what I want you to remember is the $130 mark, the 134 price tag where it's trading at right now, and then the stock did manage to get a brief support at the 138 right here. So remember all those numbers. I'm going to show you how I'm going to use those numbers in order to go ahead with the option strategy. Now let's go ahead. I'm going to show you the option strategy I will be using. So for that, we're going to go ahead. We're going to go back to Palantir, and then we're going to go ahead and open up the options chain. Now, before I continue, I have two requirements for my subscribers and also my viewers. Requirement number one is always going to be always make sure you do your own due diligence before investing. What might work for my portfolio, quite frankly, may not work for yours. The second requirement is to always make sure you have an exit strategy before entering any option trade. That way, if the trade goes against you, then you do know how to get out of the trade. So let's go ahead to trade Palantir options down in the bottom here to open up the option chain. Now the option chain is this area down here that gives us enough information in order for us to make an informed decision what option strategy we want to implement. So if I had to trade Palantir today, this is what I would be doing. I'll simply be going over to buy, I'll be going over to call, and I'll be looking for a strike date of around a month or 30 days. So the closest one is going to be August 1st, which gives me 33 days to expiration. Now, the reason why I'm only going to choose 30 days is I did show you the share price is way over the 200-day moving average. It does not matter what happens, the share price always comes back to the 200-day moving average. No one knows how long it's going to take, but it always comes back to a 200-day moving average. So I'm just going to use August 1st, which give me 30 days to expiration. Now I'm going to go ahead. Now I'm going to choose my strike price. The strike price I'll be choosing, and you probably guessed it by now, is going to be the $130 price. I did show you the pullback gave you $130. It went all the way down there. Although it's trading at 134, it did go all the way down to 134. The other reason I'm going to choose the 130 strike price is that I'm an extremely conservative investor, so I like to give myself a lot of wiggle room just in case. So with the $130 strike price, I'm going to have to pay for this because this is a buy option strategy. The amount I'm going to have to pay for this is going to be $12 or $1,200. Each option contract is multiplied by 100 shares. So you simply multiply your $12 by 100 shares, and that's going to give you $1,200. This option strategy, investors and future investors, is known as a long call. Now, if I were to trade Palantir right now, the option strategy I would be using is going to be a long call option strategy. Now, I'm going to go ahead, I'm going to show you why I'm going to use the long call option strategy and also how to exit this strategy. So, once the market opens, with this option strategy, remember my expiration is 33 days out. Most importantly, there is no way I'm going to be waiting until 33 days in order for me to close off this contract. What I'll be doing now, as soon as I enter the contract, I'll be looking to set up my exit strategy. Now, my exit strategy I will set up is about $137 or $138. I did show you that it showed a brief support right there at that price. So here's how you're going to win with this trade. Once you enter this trade and Palantir is trading around the $134, you're looking for Palantir to go up to the 137 or the 138 price. That's going to represent, let's use 138 to be solid. So 138 minus 134, that's going to give you a $4 upward move. Now with the $4 upward move, since you're doing options contract, that's going to give you a $400 gain on your options. So once you hit that point, I would be going ahead and I'll be closing off this strategy. Now, this stock could go all the way back up to 145 and even higher than its all-time high of 148. But that is not what I do. I always like to make sure I have a clear exit strategy so I'm able to lock in my gains, and that's how I keep growing my portfolio. Now, on the other side of things, remember, Palantir can still go down, and it still could go down past the $130 mark. So although it goes down, if it does go back past the $130 mark, then I have bought myself enough time in order for the volatility to work itself out and for the share price to keep appreciating in value. So if I had to trade Palantir, that is what I'll be doing right now. Now, here's something else that can be done if you want to be an active trader, which I am not. Once you have this long call option strategy and you want to make a little extra money, which you should not do, this is what you could go ahead and do. We're going to go ahead now, but before we do it, let's clear this off so I can show you the other strategy. So once I have that long call in my portfolio, 30 days out, I'm going to go ahead and make some extra money. So now I'm going to flip in the strategy. I'm going to go to sell. I'm going to leave call, and I'll be choosing a closer strike date. Now for the closer strike date, I'll be looking for about a 2-week trade. That way I could able to make some money before expiration date. So I'll be going with July 11th, which gives me around 12 days to expiration. Now I'll be going up and I'll be choosing, remember my exit strategy is at the $138 mark right here. So the strike price I'm going to be choosing is going to be above the 138. So let's go ahead. I'm going to go up and I'm going to choose the 145 strike price. Remember, the 145 was right where the share price fell down. So it can go back to that. So I'm going to go ahead. I'm going to choose that. So This new option strategy is going to be known as the covered call option strategy. I am using the long call in my portfolio as collateral in order for me to go ahead and do this strategy. Now, this strategy does not pay much. If you do this option strategy, you will be receiving $1.29, which is going to be $129, which is not much. Remember, the focus of this option strategy, the first one, the long call, is to make sure you make the majority of your money when the share price increases. Now, once the share price increase, if this trade does go against you, the share price that you traded at when you were starting out was 134. If Palantir does go up past this 145, then you're going to be losing this option strategy, and you're also going to be losing your long call. But that's not such a bad thing, and here is why. The difference between your 145 here and your 134 here is going to be around $11. So now your gain is going to be, and that's your gross gain. Your gain is going to be your $11. You multiply that by 100 shares, and your gross gain on this is going to be $1,100. So $1,100 in a 2-week time period, I mean, that's pretty good. Now, in order for you to get your net gains, you're going to have to subtract the price you're going to have to pay to close this, and also the price you're going to have to pay to get out of your long call. But you don't need to worry about any of that. Robinhood is going to go ahead and take care of that automatically, leaving you with a credit on this trade. So you're going to be up on this trade no matter what you decide to do. So there you have it, investors and future investors. If I had to trade Palantir right now, today, the option strategy I'll be using in order to capitalize on the recent pullback is going to be a long call option strategy. I'm going to leave the long call option strategy in my portfolio for a minimum of 30 days, and I'll be monitoring the trade to see once I hit my profit goal. My profit goal or my profit number is going to be $138 share price. Once it gets to that, I will be closing out this trade. I'll be locking in my investment gains, and Bob's your uncle. Now, for those of you that want to be more of an active trader, and you don't want to just wait with your long call in your portfolio, feel free to go ahead and implement an additional strategy, which is going to be the covered call option strategy, where you're going to get some extra money, which is going to be $129. But the reason why you're only going to get $129 is because you're focusing on the main goal, which is your long call, waiting for the share price to appreciate in value again. Now, I'm going to give you a guarantee. The share price is going to appreciate in value. I absolutely guarantee you that. What I cannot guarantee is how long it's going to take to go back up there. So once again, make sure you do your own due diligence before investing and have an exit strategy before entering any trade. So for those of you that made it to the end of the video, you guys are the real investors and future investors. Go ahead and do the channel a solid. Like the video, subscribe to the channel, make sure to hit the notification bell to get more videos once I post them. But most importantly, if there's someone out there struggling to grow a small account portfolio, the right thing to do is to go ahead and share this video with them. We're trying to help as many as we can get away from that regular 9 to 5 by making extra money by doing options trading for income. Now, until the next video, keep pushing your investments.